Okay, now for machinery, equipment here, these are also some of the examples of the costs that may incur. We definitely have the first bullet point here, purchase price of a certain type of machine, certain type of equipment. And if there's any discounts given from the seller, just like inventory costs, we will reduce discount. We will also reduce any discount, meaning that we'll be paying less to the party who sold us the machine or equipment. Transportation charges, just like inventory, if we agree on FOB shipping point, purchaser will be the party paying the transportation costs. So this will be the cost that adds to machine and equipment. Okay, so a lot of these really is very similar to Chapter 5 when we talked about inventory. Any installation costs, any assemble costs that helps the machine to, before it starts being used in the business, to start produce products or start moving around inventory, any cost incurred before asset can actually be used in the business will need to be summed up together. Okay, now this note here, you have to keep in mind also, up to now we have been talking about all the capitalization of assets, meaning all the cost of the asset to help it start being used in the business. If after the asset has been using in the business for some time already, it has been starting to manufacture the products, move around the products in the warehouse, after that point, if there's any repairs, maintenance, and really it's just a routine repairs, for example, like oil change, battery change, all those things will be considered expenses. Okay, capitalization is under asset account, just like these journal entries that we make is under, this is an asset account, right? But after we purchase a machinery equipment, if it needs to be fixed and it's a minor fix, it's just like battery change, oil change, those things that helps to sustain the machine and equipment to continue to be used in the business. All of those are considered expenses, repair and maintenance expenses. So meaning that machine equipment historical cost goes into balance sheet, expenses will go into income statement. Okay, it's not considered part of the cost of the asset anymore because it doesn't really gain the asset's lifetime. So an exception to this would be if a machine broke down in the middle of an operation cycle, and let's say we do a major repair on a certain portion of the asset. And after that major repair, accountants estimate that this asset could be extended its useful lifetime for 5 years, then that's a different case. Okay, if the lifetime of the asset could be extended for more than a year, then it's not considered expenses. It will be adding to the capital costs of the asset. Okay, so there's basically two cases I'll mention this in more detail next Monday. You either be capitalizing the asset or expensing the asset. So earlier, if you purchase an equipment, let's say that worth $10,000, and this $10,000 includes the purchase price, transfer cost, any cost for installing the asset, this will be the original price that you debit for equipment, let's say. And let's say we pay by cash, credit cash. This is before the asset is being used. After it's being used, we need to determine whether any repair and maintenance is major or minor. So if it's a routine change, battery change, oil change, that's minor, goes into expenses. Meaning later on, once the asset has been used, and after a year or a season, we spend $100 on changing the oil of a certain asset, then that's considered repair and maintenance expense, and we credit cash. Okay, so earlier this is an asset entry, this is an expense entry. This is for minor repairs. Now in cases that it's a major repair, if anything, part of the equipment machine broke down, and we do a significant change for the machine, we either replace the entire engine or something like that, that actually extends the lifetime of the asset. So in that cases, any major repair, we don't consider them as expense. Expenses for a shorter time frame. Okay, any major repair, we capitalize them. So if a major repair extends the asset's lifetime for more than a year, and we actually spent, let's say, $5,000 on it, then this $5,000 will go into equipment, not expenses. So the lifetime of the asset has been extended and the cost of the asset will be added. Okay, I just want to mention this since we're on this slide. After the asset is up and running, any minor expenses, repairments goes into expenses. Before it's running, all these major costs is considered part of the asset account itself when we purchase it. Now another case is after the asset is up and running, any major repair, changing the entire engine, a major part of the equipment that extends the lifetime of the asset for an additional year or two. As long as it's more than a year, it goes into asset account again. So overall, your T account for equipment later on will be the original $10,000 plus that major repair, $5,000. Okay, so this is the difference of capitalization and expenses. So if anything is minor, we consider expenses. Anything that's major is part of capitalization of the asset, part of the asset's value itself. Okay, now for furniture fixtures, the same deal. Purchase price, shipping cost, cost to assemble, all of them, we add them together before the asset is being used. Any minor repair after that goes into expenses. Any money that you spend on major repair